Traders, today's tutorial is going to cover point and figure charts on TradingView. So if you're looking to learn what these X's and O's on the chart mean, this video is for you because we are walking through the point and figure chart type, which you can see we have selected right here. We select point and figure from our chart type menu, and now we see the point and figure chart. And by the way, for those of you who are curious, this chart is fundamentally different than, for example, a line chart or even a candlestick chart because it is not based on time at all. And we're just going to give you a quick example. So here is a daily chart of gold. GC1 exclamation mark is gold futures. So we're charting gold futures. And as you can see, we can currently look back to about 2023 on this current chart type. We're recording this video in 2024, so each candle shows a day of trading. So we know each candle shows a full day because we're on a daily chart. But if you go to, for example, a point and figure chart, the view just totally changes. And if we zoom in as well, we can see that the time scale down here is formatted a little bit differently. And we're quite zoomed in, but we can see all the way back to 2014. And you can even see the space from 2016 to 2018 is quite compressed compared to other dates. And that's because a point and figure chart is not based on time at all. Time is totally irrelevant to these chart types. And if you're looking to learn more about these chart types, well, I've recorded videos about all of these charts at the bottom here. And these are known for just plotting price based on the movement of the asset. That means you're only going to see an X or circle, depending on how the asset moves. So these chart types are all about price action. They remove time from the equation. Let me give you one more example. Let's say, for example, gold stayed at this price for the next 3 months. Well, you would come back to this chart and just see this same exact X. So now you know the basics of point and figure charts, and that's the simple fact that these X's and O's are drawn based off of how price action moves. So if gold were to suddenly shoot down $30, $40, well, you're probably going to see a circle drawn right on the new column to the right of these X's here. And now let me now explain a rather important concept about point figure charts before we move into the details about creating the parameters for these X's and O's. And let me start by saying that imagine there are boxes on this chart. And these boxes surround the X's or surround the O's. And you decide how large you want those boxes to be. Do you want them to be $1, $30? Do you want them to be percentage based, say 5%, which would mean there's a box drawn every 5% move? And when do you want X's to be drawn in those boxes? And when do you want O's to be drawn in those boxes? Now that is the starting point of the point and figure chart. So you are essentially defining the way you want this chart to mark new X's or new O's depending on the price action. And when you double click on the chart, you're going to see source, box size assignment method, ATR length, reversal amount, and this is how you get to control what size boxes you want for these X's and O's to be drawn into. Now the next step is to understand, well, why are we drawing X's and O's in these boxes? X's mean the price is going up. So you can see it's green. The X's are stacked on top of each other. You know price went up, so we check a box in the X. It's almost like tic-tac-toe, but that's there's no other relation to tic-tac-toe, just that there's X's and O's. But the same way you draw an X in a tic-tac-toe box, that's what's happening here. So we have defined the size of the box using these specific details right here. And then we are drawing X's within those boxes or O's within those boxes. Now, as we mentioned, X's are going up and they're green. O's mean it's going down and they're red. Now, a few key rules about point and figure charts that we're now going to walk you through as you get the foundation for understanding them is that you can never have X's and O's in a column. So if you see a column in a point and figure chart, it's always going to be X's, O's, X's, O's, X's, O's, because you can also never have, for example, red O's followed by red O's followed by red O's. It's always going to be one or the other switching as you go forward. And keep in mind, these charts are always read from left to right. So we're not reading this chart backward. I'm only showing you the prior O's here. or circles, of course, just to make sure that you see that it goes green X's, red circles, green X's, red circles, green X's, red circles. So now you know that that is the next fundamental thing about point and figure charts. So now why are the X's drawn here and when do the O's get drawn? The O's get drawn when price moves in a reversal fashion. So remember, these X's here are showing price going up. That means these O's are showing price going down. So if suddenly a O was drawn here and an O was drawn here, now in the next sequence of columns, well, now you know price has reversed. It was previously going up, and that's because it was moving according to the box size that you defined. It was moving up through those boxes, but then suddenly it reversed, and now we're drawing O's. So hopefully that makes sense, and if not, we're going to walk you through now the box settings to really illustrate what's important about the point figure chart types and how to use them. Before we go into the chart settings here, chart settings, symbol, as we mentioned, source, box size, ATR length, reversal amount, let us just show you how you know you're on a point and figure chart. As you can see, it says gold futures, 1 day. We're on a daily interval. It says COMEX, that's our data provider. And then you see PE and F. P and F is another way to say point and figure. So if you ever see P and F, you know point and figure, you're well on your way to already being a great TradingView chartist, in that you now know the basics of point and figure. You know what it's called. You know its acronyms. You can spot it from a mile away. You know the foundations of the X's and O's. And you know it's not time-based. It's only based on price action. Each X is drawn only if price moves upward in a certain way. These circles are only drawn when price moves downward in a circle way. And you only get a new column when there is a reversal that you define. And you can see, actually, once you get good, that you can read those specific parameters right here. ATR is average true range. Well, if we open up the chart settings, check it out. Box size assignment method is ATR. We also have traditional, and we have percentage LTP. And you'll observe that the chart changed on each of those. So actually, we're going to double click here. And once again, by the way, now it says percentage LTP. Then it tells us the parameters of those boxes, 1%, 25, 3. And by the way, let us just show this really quick. It says percentage LTP, and here's our point and figure chart. Let's go to ATR, changes. Let's go to traditional, changes. That's because the boxes are being created based off of different calculation methods. So how about we walk through now the chart settings so you know exactly what they're for. Well, if we double click on the chart, get the chart settings open, we see our source is our close. There's also HL, high low. But let's use source, so that's the close. And that's going to pull from the time interval that we have selected here, 1 day. So the closing price on this daily chart. Then it says box size assignment method, ATR. That means average true range. But we could also have traditional or percentage LTP. Average true range is just what it sounds like. It's the average true range of the symbol you're looking at, and then you can add the length. So do you want the average true range over the last 14 days? Do you want the average true range over the last 5 days? Do you want the average true range over the last 30? The choice is ultimately yours, and it's 30 days because we're looking at a daily chart, so you can customize this and change it depending on the interval you're looking at. Let's just go back to 10. So our average true range length is 10. Now reversal amount is 3. So that means we need to have the condition satisfied perfectly in order for a red circle to be drawn. It has to break out of that average true range in the opposite direction to then get a red circle. And if we open up our chart settings, for example, and now walk through traditional, which by the way, traditional is going to be points or dollars. So if we're looking at, for example, a chart of Apple and we have traditional selected, well, that's rather simple, isn't it? It's traditional, it's a dollar. So let's double click. And let's change this around. We're on a daily chart. Our box size says 10. Our reversal says 3. Let's not do $10. How about we do 1? So let's just do $1. And you can just see how quickly the chart, by the way, expanded. And now there's more data. That's because now our boxes where the X's and O's are drawn are $1 each, not $10 each. Why don't we go to 5 and watch it change again? So what's happening here is we are getting X's being drawn upward every $5 move that occurs. So if Apple goes up again now to 230 plus, we're going to get a whole new X being drawn up here. And you can actually see that quite literally by checking the data. You can see this Apple right now is at what looks to be about, it's in this $225 range, and you can see price is perfectly matched up to 225. If you go down, you're going to see 220. If you go down, you're going to see 215. So each X is moving down $5 each. You can literally test out your box size by running your numbers over each X. Now the reversal amount is 3. So you're going to need a reversal amount that's going to have to occur based off of whether or not it moves down this box size 5 times, or $5 times 3. So you're basically saying only draw a red circle if it moves down $15. That marks a reversal. Watch these red circles change if we go to 2. You can see now it's changed pretty dramatically because now we've made the reversal a lot easier. It's not as sort of difficult to reverse. It went from 5 times 3 to 5 times 2, so our reverse amount's 2. Watch what happens if we do change it to 5. Well, there's not that many reversals now because guess what? We changed it to quite literally full-on $25 moves to mark an entirely new reversal. So hopefully by now you're starting to understand that you are the creator of your point and figure chart and how important it is that you get to create the X's and O's that you want drawn in front of you based off of your trading style. So for example, if you are looking for breakouts only based off of dollar moves, you should create a point and figure chart and just watch that chart. Don't let time persuade you or trick you into doing anything. Just set up your chart to only track price action, remove time from the equation, and follow accordingly. So if we double click again, by the way, we could even make our boxes percentage based, and you guessed it. This means each box is drawn based off of a percentage move. Right now it's 1%. So you can imagine each box being a 1% move. If we double click and change this to 10%, well, that's a fairly large box. In fact, it's such a large box that the chart does not even fully render all through time as you might think, because it's just simply too large of a box. And we're going to want to shrink that. Let's go back to 5%. You can see that even shows us a little too much data even as well. What if we go to 2%? And this is quite a good look. So you're going to want to make sure that you test and iterate on the box sizes that you wish to create. So now we've set it to 2%. That means each box is 2% and our reversal is still 3. But if you want to make the reversals happen more often, let's want to do 1. So basically every 2% move, let's just reverse it. That's a pretty cool chart, actually, if you are someone looking to trade specific percentages on a point and figure chart. And hopefully that especially opens up your eyes in terms of what's possible on the box assignment method. So if you're trading percentage moves, you can quite literally type that in and just wait for those percentage moves before you ever trade. And that is why traders use point and figure charts. So ideally, by the time you're done watching this and made it this far, you know how point and figure charts work. And it's also important at this time just to remind you that you can customize your point and figure chart as you would any other chart. You can change the color of the up bars, which are green. Green's going up. The down bars are red. Please select a color of your choice. Let's keep it red. You can have projection bars as well, which are sort of showing you that the next X is going upward or downward or circle downward. And you can build this chart to your specific needs as needed. And we hope that you enjoyed this video, and in future videos, I'm going to make some really specific introductions into how you can draw on point and figure charts, create trend lines, maybe think about a long-term investment or trade idea, and some other ways to utilize these specific charts that are not time-based, but are specifically price action-based. So I hope this video helped you get started with this point and figure chart. Please leave any questions or comments below. And be sure to subscribe to our YouTube channel to get these updates all the time and check out our Help Center. Thanks so much for watching.